Ladies and gentlemen, we're back to the Liberation Day playbook. Market gets to all-time highs, Trump announces ridiculous tariffs, the market corrects, and then we repeat the entire process. Trump just announced some insane tariffs after the bell, markets are moving, and we're going to talk about what this means for stocks. So we've got a lot to talk about. Let's roll the tape. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks pushed higher on Wednesday amid another batch of corporate earnings and as President Trump's new deadline to impose tariffs loomed. And today was actually a broadly green day. We saw the mega caps really outperform. Semiconductors led here by AVGO and Nvidia were up 3% and 0.65% respectively, despite coming off a big move lower here in AMD, but their earnings was more company specific. That is why we saw stuff like Arista Networks, Cisco Systems, and semiconductor hardware equipment manufacturers not disastrously red. Some of the mega caps did outperform. Apple, Amazon, Tesla were all very, very green today, all up in excess of 3%, and Apple up 5.1%. Palantir was up another 3%. And then we also did see some of the bigger names here in consumer defensives. Walmart, Costco was up 4%. And I think that partly had to do with McDonald's just providing a really good report for the entire discretionary space and the consumer at large. Google and Meta were also slightly in the green along with Netflix. And that's why the communication services sector did very, very well. And other than that, it was pretty mixed priced action, excluding here healthcare, which was a complete dumpster fire. Healthcare was the worst performing sector, as you can see. That was followed suit by materials, energy, utilities, and real estate. Sort of these quintessential risk-off sectors were in the red today, but that's because yesterday they were fairly positive and we just saw a little bit of a rotation. These are some of the big losers yesterday. They were in the green today. These are some of the big winners yesterday. They were in the red today. I guess you could just say it was a flippening or some form of a rotation, but the S&P 500 up 0.77% today. A fairly Monday, a fairly good day if you ask me, and that was led by, technology, XLY discretionary, which was up 2% on the back of Amazon and Tesla. Financials were in there, comm services were in there. All in all, a fairly good day for the market, very bifurcated. Large caps did very, very well. Large cap growth, large cap core. This is the majority of the market, as you guys can see, both up in excess of 1%. The core segment of mid caps and small caps didn't do so well. The growth segment did significantly better, but underperformed their large cap counterparts. And then value took it on the chin today. The entire value segment across the board, deep in the red. But again, that's because value yesterday was really, really green. Globally, stocks did really, really well. Europe was in the green. North America, very green, including Canada. Very weird. South America was very green. And then Asia was a real mixed bag with the Middle East green, Australia green, New Zealand green, and South Africa green. So for the most part, just green through and through. Now, a big reason why we saw the momentum today was sort of, like I said, that flippening and just a digestion of all of the moves and volatility we've seen as of late. But also, early in the AM trade, Apple came out and Donald Trump announced that they will be investing an additional $100 billion in US spending expansion, including a $2.5 billion manufacturing plant in Kentucky. And the market actually really rallied on the back of this news. Apple was up 4.84%. That lifted all of the NASDAQ constituents and lifted the market and the growth segments of the market as a whole. However, we're getting cold water poured on some of that because after the close today, Trump came out in a press conference and vowed a 100% tariff on chips unless companies are building in the US. However, the wording here is very, very interesting. You got to be cautious with this headline because Trump didn't say the chips must be built in the US to avoid the tariffs. He said companies that are actively building in the US will avoid those tariffs. So we know that TSMC is actively building in the US right now, so they'll be void of those tariffs along with AVGO. So for the most part, semiconductors should actually be okay. Looking ahead at this, and this could be another negotiation tactic for Trump to come through and then taco his way out of it. You know how Trump negotiates. It's a punch you in the face, very strong start to it, and then we'll dial it back just to give him that leverage. And then we did see some of the semiconductors move today. AMD was down 6%, but this was in large part due to their earnings. And if you want the full scoop, we have a full update right here on the second YouTube channel, FinFluential Media. We talk about AMD. We also uploaded a Lemonade video, Hims and Hers Health, and you can actually go have a look at Apple We have an Apple earnings update along with Meta, PayPal, Robinhood, and a whole bunch of others. So go ahead, check it out. FinFluential Media. I'll leave it in the description below. Another market mover today was Uber. Now, they reported earnings beating on both the top line and the bottom line. Revenue, trips, and gross bookings all grew 18% for the quarter, a very solid quarter. Management guided for gross bookings of around about 48.5 billion at the midpoint, which is slightly below the consensus, and that is why we saw these earnings, which the quarter was very good, get sold off, especially here. It was quite volatile. However, Uber did announce a $20 billion share repurchase program. Very volatile trade, slightly in the red, but I think this is a good quarter, and I think Uber is cheap, and we're going to talk about Uber on the second channel. We're going to release a video on Uber, and do I think it's undervalued, and my initial price targets there and about. We also had a couple of other market movers here. e.l.f. Beauty was down 10% after beating on the top line and the bottom line. I haven't looked into this earnings, but I'm assuming there was something with the guide. That's why the stock was down. Normally when you see that, it has to do with the guide or the outlook. DraftKings was up 2% here in the after hours after being up 1% today. Very volatile price action. However, they beat on the top line, beat on the bottom line, and I'm assuming that the guide is good. That's why the market loves these earnings, and not an expensive stock if you ask me. It says here PE of 96.5, but if you look ahead, right, next 12 months, the PE goes down to like 16 or 17. It's actually a pretty cheap stock. So we may cover that on the second channel as well. I definitely do like the gambling sector. And then for everything we saw today, there was 2,800 advances, 3,500 decliners. We saw net inflows in the NASDAQ 100 and the New York Stock Exchange. The S&P 500 was green today. And market momentum continues to remain as it was yesterday. You know, these medium-term averages still looking largely robust, but the 200-day and the 20-day are still trying to get above the 50% there. But the 5-day, very, very encouraging. And we actually saw improvement from yesterday into today's trade. Now, guys, looking at the charts, you can see that the mega caps here outperformed the S&P 500 and the NASDAQ 100, or I should say large caps for the most part. And then we saw stuff like the RSP, the RTY, mid caps and small caps. They were slightly in the red, but only down 0.2%. So nothing crazy, and still up after yesterday's pretty big run we saw on a lot of these names. Apple was the reason why we saw the mega caps outperform. And you could see that Apple, since the tariff tantrum lows right here, has sort of been stuck in this range, doing much of nothing, while the rest of the market has retaken all-time highs. But Apple's at a very critical juncture. You could see right here, it's used this level as support multiple times. If we can go ahead, break above, right, and continue to move higher, that could actually mean upside for stuff like the NASDAQ 100 and the S&P 500, simply on the back of Apple, because it's like a $3.5 trillion company that was up like 5% today and 3% year in the after hours at the $220 per share mark. And because of that, growth clearly outperformed value, but both in the green. Now, futures are actually green on the back of this news right here, Trump vowing 100% on tariff chips. However, when you dive into the details, you come to the realization that that news actually doesn't affect the mega caps, specifically TSMC, AVGO, and stuff like Micron. So largely the mega caps are going to be fine. And that is why we're actually seeing stocks broadly green and the dip being bought. If you actually just go to the futures, if we actually just go to the S&P 500 futures and we look at the 1 day, you can see that stocks actually fell on the back of that news here in the after hours, right after the market closed. And then we've actually paired some of those and actually finishing in the green. The US 500, S&P 500 futures, NASDAQ futures are all up. Dow Jones and Russell kind of flat. So yeah, mostly, continuation of today's trade that we saw. The mega caps seem to be continuing that right there. European stocks were flat today. Middle Eastern stocks gained, and so too did China stocks. Bitcoin and Ethereum cryptocurrency, very, very bullish. Still at the 115,000 mark. It looks like that is going to be a very strong support level. And then volatility was down today for the most part in the S&P 500. The 2-year yield fell. We saw gains in some of the longer ended part of the curve, the 10-year yield and the 30-year yield, with the dollar falling 0.5%, TLT falling 0.5%. Gold flat, silver up 0.22%. Let's talk about the S&P 500. And yesterday, guys, we said that on the daily chart, the line in the sand we're looking for right now is the 63.40 area. That's exactly where we're approaching right now. We're seeing resistance at the 63.40 area. So I said, as long as we're below this, the chances are we go to the 6200 area, as you can see right here. However, if we are above this key line in the sand, it does look like we close slightly above it. We probably go towards, the 6400 area, potentially new all-time highs. If this was the August dip everyone was talking about, it was probably the shortest and shallowest dip we've had all year, even shorter and shallower than the massive tariff tantrum here. But yeah, I mean, peak to trough, if we do go back to all-time highs, peak to trough, you're looking at a 3% dip that got bought out, not even a 5% minor correction is what they call 5% pullbacks right now. So retail coming in and buying the dip, institutions coming in and buying the dip. I wouldn't even consider this a dip. This was just like a small glitch in the system, and now we're moving onward and upward. However, let's not get too giddy. We still have to go ahead and consolidate well above the 63.45 area. Constructive price action today and so far this week. However, anything can happen, especially with Trump tariffs. We saw today with the futures, right? Futures did pull back significantly after that news. However, after the assessment of the news, we came to the realization that, it doesn't really impact the mega caps, and hence why we're actually moving higher. But don't get me wrong, there could definitely be things that move this market. Stuff like tariffs on countries that buy Russian oil, tariffs on China, that type of stuff. So there is certainly things that can move this market, but earnings is mostly behind us. We don't have any high impact data this week, so we're really just going to be trading on the price action. And that's why I said the 63.40 area is our line in the sand. I think if we get a weekly close above there, we probably go ahead, target the 6400 and potentially all-time highs. I mean, the bulls have been very strong this week through everything. They've just bought the dips and rallied, and these are strong bullish candles. A couple of bearish candles, but this one here is Friday as well. The Nasdaq 100, very similar situation. In fact, the Nasdaq 100 looks like it wants to go higher. It wants those all-time highs because the 23,200 level are lining the sand. We had a strong close above. So yeah, I think all-time highs for the Nasdaq 100 versus seeing that in the after hours, the futures looking actually pretty bullish if you ask me. Now, let's actually go ahead, look at European stocks. You can see, again, just consolidating right here. We know this Middle Eastern stocks, the ISRA ETF. If we get a pullback to this $47 area, this could ultimately be where we want to buy. However, I wouldn't be surprised if we actually just find a low right here, because we did actually use it as resistance right here and kind of at the top, a little bit out of range, but resistance isn't this like perfect one-to-one thing. It's more of like a range than it is a specific line. And then looking at China stocks, sort of finding support right here at this 35 area. I think this is still a great area to buy, considering where all-time highs, where 52-week highs are for China, and all-time highs close to the $80, $90 region. Now let's talk about Bitcoin. Bitcoin continues to consolidate right here at above this 111,000. And to be honest, the $114,000 mark. I think Bitcoin is going to continue to do that. I think we're just going to trade sideways in this region and then go from there. And when I say trade sideways, there's definitely going to be a lot of volatility. You could have swings of like 5 to 6% and still be within a range, such as how volatile crypto is. Ethereum, you can maybe times that by 2, but it does look like we're finding acceptance at this level right here. And I think we're just going to trade inside this range, digest the massive 180% move we've had off the lows from the tariff tantrum in Ethereum, consolidate here, and then make our next move to the upside. I am bullish on Ethereum. I do think we're going to see all-time highs before the end of the year. And that all-time high level, we actually just zoom out, would be the 4,800 area. But like I've been saying for a while now, seeing resistance at this level, not really constructive. However, I do think we are seeing acceptance of this move to the upside at the top right here, because bears can't take us below this area right here, but bulls can't take us above this area. So we're accepting pricing, we'll just consolidate and then go from there. We're doing very much the same in gold. We're sort of just consolidating a lot of the massive gains we've had over the last 18 months. We're just digesting this price, and then we're going to make a move to the upside or the downside. And we can definitely see a further move to the upside if rates do come down. I mean, if we do get rate cuts, which the market is pricing in, we also do see that the 10-year yield is falling. 2-year yield at 3.7% is signaling to the market that we do need some form of a rate cut. It's telling the Fed we need to cut rates. If we do cut rates, cash becomes less attractive because it's paying less of a yield. Gold becomes more attractive. And in that scenario, gold should do well, silver should do well, Bitcoin, crypto can do well. Any dollar debasement hedges will do very, very well. And that's just stuff like stocks, stuff like crypto, stuff like gold, stuff like silver, but particularly commodities, Ethereum, Bitcoin. They'll do very, very well in that environment. And diving into sentiment, this is the Fear and Greed Index, and we continue to be in this neutral zone after we saw a massive move in the last couple of weeks from extreme greed into the neutral zone. In fact, at one point we were pushing very, very close to the 50 mark. We're now moving sort of back into the greed territory, telling us that investor caution is waning. Investors are buying the dip. And the reason why they're doing that is because earnings is great. 11.2% earnings growth for the quarter, 5.6% revenue growth, smashing earnings expectations. If you exclude energy, earnings are even better. Margins are performing. This earnings season has been absolutely stellar. And what are corporates doing with this cash? They are buying back their stock. In the month of July, companies announced a record-smashing $166 billion in stocks buyback, more than doubling the typical July. We also got another big buyback announcement from Uber, which was $20 billion. Absolutely insane. And when companies buy back their shares at this scale, it usually means one of two things. They're flush with cash or they think their stock is undervalued. Either way, it's a bold vote of confidence and definitely bullish for the market. Now, looking at the macro, guys, I still think the macro is very, very solid when you look at other aggregators of the data. For example, Q3 GDP, 3%, very solid. The expectation was for 2.5%. So we absolutely smashed expectations as it pertains to GDP. And when it comes to the labor market, I know we got these massive revisions and people think there's weakness in the labor market. But when you look at other measures like the actual treasury statements for withholding tax and FICA statements, we're just not seeing any weakness. This is growing at a 4.7% clip. I don't see any slowdown. When you look at federal employment tax receipts, right, we're growing at 7% through the month of August, right here, the 4th of August, right? And for the last 3 months, if you look at May, June, July, we grew at a 6.1% clip. So if tax receipts grew at 6.1%, personal income rose at 4.2%, and you're telling me only 33,000 jobs were added, either productivity is off the charts or jobs data is dead wrong. However, it's not all good news for the economy. The US non-manufacturing PMI has been on a clear downtrend. We got this data yesterday. And while this is above the 50% mark, which does show expansion, the trend is clearly to the downside. And this signals slowing growth in the services sector, which is a major driver of the US economy. If this trend continues, it could raise concerns about a broader economic slowdown, pressuring cyclical stocks and potentially boosting defensive stocks, while also increasing expectations of a rate cut, potentially supporting tech and growth stocks. But either or, the slowing is definitely not something you want to see, especially if the labor market data is what the BLS is telling us. Now, looking at data for the rest of the week, tomorrow, initial jobless claims is going to be the big one. I think everybody's going to be watching this as it pertains to the labor market. We're looking for consensus there, 220,000. We also have a couple of Fed speakers, and that's really it for data tomorrow. Earnings, we're sort of rounding out the week right here. We had very big names, very good earnings so far here on Wednesday. And then tomorrow, we're going to open up with Eli Lilly, Celsius, Datadog. They're really going to move the market. Crocs also reporting, as you can see right here. Then after the close, we have Rocket Lab, the trade desk. We might cover them or Rocket Lab. Tell me which one you guys want me to cover in the comment section below, and then X, Y, Z, or Block. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.